Hey everyone, welcome back to the channel. Got a little bit different one for you today. I got a really awesome indicator that I like to use, and it just overall I like to use it by itself to determine an overall trend to see if I should lean more bullish or more bearish. You can use this one by itself too to kind of isolate everything. You don't want analysis or paralysis by analysis by having too many indicators up, right? So this one is called trend following moving averages. And so if you go to the indicators, you put in trend following moving averages. It is this one right here, and it is by Lonesome the Blue. All right, so you click on this one. Right now there's about 3,800 applications, so it's a pretty decently common one. All right, so what you should do for this, or really any indicator, is look at how it performs in the past to kind of help you determine how it's going to perform in the future, right? So if we just go over to COVID really quick, see this COVID crash right here. You know, it had you getting out of the market. Pretty high point, right? About the beginning of March, which is about when everything crashed. And if you would have re-entered with this indicator, right when all the moving averages turned green and the price action was above, you would have gotten in at like a perfect time. Obviously the perfect time would have been down here, but is there any indicator that really timed that perfectly? Maybe, but at the end of the day, this is a pretty good indicator here. So I just like to point out some of these indicators as we go on. Now, one thing that you can do is notice how right here you did have some green points where the price was above the price action, or the price action was above all these green lines, but you can see that it was a lower high, right? So you do have to indicate or determine lower highs and higher highs, and so these right now are the exception to the rule, right? You had the exception to the rule where we just kind of popped over the red back in April, and then we had another one right back in August, right? And one thing that's really interesting now is I'm starting to see the opposite. Well, we've been seeing the opposite for a little bit of time, right? But now we're starting to gain some more data and some more points, right? And that's where we're starting to see the uptrends. The price action is above the lines more than it's below, and you have these little inflections down. And so if you're looking to go long on this, right, you want to see that these red marks are a good opportunity to start thinking about going long, and you can see consolidation right here. And as they bounce up above the moving averages, you can start to see now where the uptrends are becoming a lot more. And anytime that we're in the red, we're really just consolidating at this point, right? So a good time to get in with this would be if we did happen to see another little lull and some consolidation, and then once we bounce right above that. So it's a good indicator to use on its own. There's also heat maps that you can use with it to kind of help determine the trend, right? So this is really cool indicator, something to bring up on its own, and just kind of look at something from a little bit of a different perspective. So right now the S&P 500 is in an uptrend. We can bring up the triple Qs as well. You're going to see the same thing, and actually the triple Qs have been in an uptrend with this indicator since back in January. So this indicator on its own really could be a pretty helpful indicator on determining whether or not you should be bearish or bullish in the overall sentiment. So that's all I got for you. If you like this video, you see value in it, just hit the like button. It's the easiest way to help out the channel. If you want to see more of this content, some more indicators that I have, hit the notification bell and hit the subscription button so you can see all of my latest content. Until then, I'll see you next time. Thanks.